time has arrived where Greg should become the chief executive officer of the company at year end. Greg would be the chief executive officer of Berkshire, and I would still hang around and could conceivably be useful in a few cases, but the final word would be what Greg said in operations, in capital deployment, whatever it might be. I could be helpful, I believe, in that in certain respects if we ran into periods of great opportunity or anything. I think that Berkshire has a special reputation that when there's times of trouble for the government, that we are an asset and not a liability, which is a position that very hard to have because
So Warren Buffett is stepping down, and this definitely hits me pretty hard here. Now, if you're new to the channel, welcome in. My name is Colton. We work on fundamental analysis on this channel. And going forward, this is basically going to be a step-by-step on how I'm personally investing in this market, as I do think we are going to see some turbulent times ahead. Now, Warren Buffett to me was definitely a person that gave me a chance to get out of my situation. I grew up with very little resources, a single parent that worked multiple jobs, and didn't have a lot of parental vision. I started getting interested in the stock market around 18 years old, but I didn't really take it serious until my 30s. But with a lot of hard work, a little bit of knowledge, and discipline of putting money away could create generational wealth for you and your family. And that's the cycle I personally wanted to break. And so while I was in the military, I read a book called Rich Dad, Poor Dad and started following a man by the name of Robert Kiyosaki. I obviously followed Buffett anytime the guy spoke. Regardless of what was going on in the economy, he always kept a calm, cool collectiveness about him and stayed focused on the opportunity in front of him. And so if you're new to the channel, thank you guys for tuning in. Let me explain exactly what has been going on here. Jerome Powell and the Federal Reserve kept rates at 425 to 450, rates unchanged, and obviously this set off President Trump. So not only are we dealing with a trade war, but we are obviously seeing government officials not on the same page. And when I look at valuations and I really break down Warren Buffett's annual meeting at Berkshire Hathaway, to me, some things really hit home. Now, Berkshire talked about concerns of the US dollar, and they are sitting on a ton of cash. Now, when I see gold prices spiking in the manner that they are spiking, that is telling us that there is a massive flock to safety, there's an inflation hedge, and there's really a bet against the dollar. And so maybe Buffett is onto something here. And if we listen earlier in this video, he did state that he wants to be an asset for the government. And what does that mean? I don't necessarily know, but he obviously thinks something could possibly happen where he would have to step in and help out in some sort of way. At least that's what I've gathered. And so with a lot of uncertainty, we are definitely seeing a lot of volatility, and rightfully so. But then I go back to what Buffett has always stated. Be greedy when others are fearful, and be fearful when others are greedy. And I'm just not seeing enough fear in this market to really dictate going all in at this point in time. We're looking at a market that's trading at 24 times, nearly 25 times earnings with a lot of uncertainty in the middle of a trade war. And I definitely think there's some sort of off balance we're seeing here. And obviously it's risk on because we're seeing the markets now spike back up and we're seeing Bitcoin reapproach 100K. So to me, risk tolerance is very high. There's still a tremendous amount of liquidity, which means markets could absolutely go higher. And then when I think about what happened during COVID, I think we've been in this rolling recession where the market has been extremely high on fiscal spending. There's been a tremendous amount of overspending. I think this has created asset bubbles. I think it's created recessions in certain pockets of the economy, especially when we look at manufacturing, real estate. Now we're starting to see things in the softer data like delinquencies pick up, consumer credit defaults pick up. But the hard data is staying pretty solid here with unemployment sitting right around 4.2%. So it's been a tale of two different stories here. What do you want to believe? Do you want to believe stock prices going higher, or do you want to pay attention to what the gold market and the interest rate market is basically telling us here. When we take a look at the gold chart, it almost looks like a tech company that had rapid growth of earnings here, but that's just not the case. To me, this is definitely a flock of safety. This is definitely an uncertainty of the US going forward. And so it's very, very interesting times. Now, let me explain exactly what's been going on with me. So over the last few weeks, I started contributing to a Roth 401k, and we can see here in week 1, I had $420 in there. Week 2, $760, and then here we are in week 3, pushing just below $1,200. Now, when we take a look at how this has contributed here, I'm basically getting an 8% match, putting 50% of my income away. Now, if you're new to the channel, I have a couple sources of income in this household, so I'm able to do so. And when I'm looking at the market here, I'm going to explain why I'm doing this. Right now, I'm diversified at 60% domestic, 39% foreign, but we're actually going to start reversing this around. It's going to be closer to a 60-40 on foreign stocks, because I tend to think that we're reaching a peak in US equities, and I think there's better opportunities when we look at emerging markets because of the amount of investments that are going to other countries that are underdeveloped and have bigger opportunities to grow GDP at a much higher clip than the US does at this point in time. So I tend to lean more towards looking at foreign stock markets at this point in time, with a focus on cash building for the opportunity to buy individual names, which we'll talk about in 1 second. Now, I am contributing a percentage to Disney stock because Disney has hired me, and I do think anything under 110 is actually pretty reasonable for Disney here, especially if you think the US economy is not going into a recession, which I still do, but let me explain why I'm contributing here. Now, once again, with an S&P 500 trading close to 25 times, I don't necessarily think I'm getting an extremely great deal here, especially with the amount of uncertainty going forward with trade talks. I think soft data is starting to show some interesting signs. I also think that we could see unemployment tick up, and Jerome Powell kind of went about mentioning the word stagflation without physically saying stagflation. So for me, I definitely think this multiple could actually come down a lot more than where it's at right now. So I believe we're in this topping formation here where markets are pulling back on uncertainty. I think growth is going to slow. I think we could be in some sort of stagflation, and I do think there will be some sort of shock financially that takes place by the end of this year, whether that's unemployment ticking up or it's some sort of financial dysfunction that takes place because of over leveraging. And now we're starting to creep back up, and I definitely think this is where the max pain is going to come in before we get the decent drop off, and we'll have kind of a flatlining, building a base, and then we'll get government stimulating again, and then we'll probably hit newer highs. But instead of playing this game, I decided to kind of get ahead of it here and start averaging in all the way through here while getting an 8% match at work using a Roth 401k, so it's tax efficient. And then over the next 3 to 4 years, where I do think we're going to have an opportunity to accumulate a lot over here, I think this is where the wealth is going to be built. And while that is happening, if I am correct on this part, a base forming down here and opportunities coming in the next year or so, then I'm going to buy individual stocks with this account. Basically have just under 43,000 sitting in this account. Now, this is an account that hit a high of around 44.7 and it's down roughly 2,000, so a little less than 5%. And I tend to think that we're going to see better buying opportunities for individual names. So while I'm averaging into indexes and specifically focus on foreign indexes, I tend to think that we are going to be having an opportunity to buy some individual names if I'm right. Now, whether I'm right or wrong really doesn't matter. I still think valuations are a little stretched here, and I think there's a tremendous amount of uncertainty when it comes down to technology. We're watching names like Google and Apple really underperform the broader market because of how technology is now moving. Is there other alternatives when it comes down to AI for search engine that people are now going to start using over maybe Google at this point in time? And that's bringing a lot of fear, possibly opportunity, but I think it's a lot of unknown on top of the unknown in tariffs. So I'm really finding it hard at looking at these valuations and with the uncertainty of the economy on where we should actually be focused on putting money. And so I definitely think averaging into indexes as the market is possibly going down is the best way to go right now until we get some clarity. And that's where we're using that other account with the 40,000 to maybe start picking a handful of names. I got to listen to the majority of Buffett's annual meeting, and I would say that there were some things that really stuck to me, that you only really need a handful of opportunities to really outperform the market and create generational wealth. And now I don't want to misquote it, but I believe he said over a 50-year period, he probably had about 10 really good ideas that changed everything, or something to that effect, which then brings me back to kind of what I've been doing on this channel. A lot of times we're trying to catch the algorithm, catch people's attention, and I just don't know if that's exactly the route I want to take anymore. I really want to be focused on just a few different opportunities that present themselves. As of right now, I'm not really seeing anything that is a generational opportunity. Obviously, we'll start digging into some names, but it really made it clear that I think averaging into an index when you're not sure what to do is probably the best bet. Playing the longer term trends like I am, where I think emerging markets outperforming domestic markets for an extended period of time, especially if there's a downturn. And then having that cash like Buffett has to capitalize on the biggest opportunities that we could see. Trading at 25 times, I'm not necessarily sure this is the greatest opportunities we're going to see over the next 3 or 4 years. So why not build out on those indexes, build out cash to capitalize on better opportunities? And that's exactly what I've been doing. Over the last few weeks, we started putting money into a Roth 401k where we've got $1,200 in there. We started building out an emergency fund of over $5,100. So we're slowly trying to build some financial stability here. I have some decent cash to buy some individual opportunities that I think present themselves. I'm starting to build an emergency fund to where we get 8 to 12 months of living costs. And then we're contributing 50% of our weekly check into a diversified index, leaning a little bit more on emerging markets going forward, because I tend to think that's where the valuations make a little bit more sense. So as always, ladies and gentlemen, hopefully you enjoyed my dive into the last few weeks. Sorry I haven't been able to post as frequent as I usually do, but let me know what you think down in the comments. Is this a continuation of a bull market? Are we going to see an S&P start approaching 30 times earnings again? Or do you think that we are possibly going to see some turmoil ahead and have better opportunities to buy individual names? As always, really appreciate your time, and we will see you all in the next.